Welcome to our channel. If you want to significantly reduce your tax bill while building retirement savings, follow the step-by-step instructions to maximize retirement account contributions. Step 1. Understand the different retirement account types available to you based on your employment situation, including 401k, IRA, SEP-IRA, SIMPLE-IRA, and solo 401k. Step 2. Maximize your employer. 401k contributions up to the annual limit of $23,000 for 2024 or $30,500 if you're 50 or older, receiving both tax deductions and potential employer matching. Step 3. Contribute to a traditional IRA if you're under income limits, deducting up to $7,000 for 2024 or $8,000 if 50 or older. Step 4. Consider a Roth IRA or Roth 401k for tax-free growth and withdrawals in retirement, especially valuable if you expect higher future tax rates. Step 5. Establish a SEP-IRA if you're self-employed, contributing up to 25% of net self-employment income or $69,000 maximum for 2024. Step 6. Set up a solo 401k if you're self-employed without employees, allowing higher contributions combining employer and employee portions up to $69,000. Step 7. Make catch-up contributions if you're 50 or older, taking advantage of additional contribution limits designed to help older workers boost retirement savings. Step 8. Time your contributions strategically by maximizing deductible contributions in high-income years and considering Roth conversions in lower-income years. Automate contributions to ensure you consistently maximize these powerful tax reduction and wealth building tools. Don't forget to like this video and subscribe to our channel.